Hey everybody, it's Pete. Welcome to Stock Trading Pro, and more importantly, welcome to the Daily Ticker Podcast. We have a lot to break down today. We're actually going to go step by step through the entire market setup this week. Obviously, there's big tech stocks reporting this week, which is going to be a major focus for the market. But the question that we posed today in today's title is the Goldman Sachs breakout that we're about to see going to rescue the entire market, have financial stocks after the Armageddon that was predicted after SVB and FRC kind of imploded the entire market, and all of those nasty headlines about they're going to bring everything down, big credit crunch. Well, we're seeing the opposite. We're actually going to break down right now how both Morgan Stanley, JP Morgan, Goldman Sachs, the large cap financial stocks kind of holding that bid right now, kind of out of nowhere. Healthcare, which got absolutely demolished for about 10 weeks, took a shot of adrenaline and rocketing higher today. We're also going to give you a behind-the-scenes look at a coaching call question. Every Saturday at 10 o'clock in the morning, we host our live swing trade session, which kind of sets the tone for the following week. I'm going to take you behind the scenes today. We're going to discuss the question that was posed by Cynthia, and it turned into an intense hour of answering just this one question. I'm going to show you that question in just a second, and we're going to do that. But most importantly, today's video, we're going to map out the entire week around the earnings that are about to come out. We're going to take a look at that in a second. Boy, we have a lot to cover today. It's going to be an exciting video. So stick around. Be back in just 1 second. Okay, so good morning, everybody. Very excited to be here with you. Good morning, Joseph. Happy to see you. Hey, Don and T. Brown. How's it going? I hope you're making some money this month. So we're going to actually start out with the news, right? Let's just start right there, and then we're going to hop into everything else. So obviously, futures are down a little bit, but they're actually kind of coming back. You can actually see we were down 9 at one point, and we're kind of rallying. Boy, the bulls are just not ready to give up the bid. And what I really like, look how perfect technically this is. Big double bottom, a push and a pause, a push and a pause, a push, and heading back. We're almost positive right now. And that's actually something that's really important as well. Keep your trading as simple as possible. It's not, you don't need more. You need to learn how to use it better. And that's actually a really classic example of that right there. So we're going to go fast today. We got a lot to cover. So I'm going to pop this back on the daily chart. And I just want to, obviously, heading into the week, it's Monday morning, about 2 hours before the market opens, 2 hours before the week starts. The big thing, obviously, is tech. We're going to get around all this stuff. This is really what we're looking for right here. This is the main conversation. Alphabet, Microsoft, Amazon, and Meta. And I actually want to start out with Amazon because it actually had a pretty big breakout on Friday and pretty good volume. So obviously a lot of these big cap stocks we're talking about right now, tech specifically, pushing through. Something else to note, the semiconductor stocks. We're going to talk about that in a second. But is the Amazon breakout real? That's the big thing we're going to talk about. So again, something that we talk about in today's newsletter as well is knowing that these earnings are coming out is position sizing. It's a big question that we get all the time is you have a position on, specifically a swing trade, and maybe you had it on for about a week or two before earnings are coming out. So let's say you bought it last Monday, the stock is kind of waffling back and forth, and now earnings are coming out, let's say Tuesday or Wednesday. What do you do with that stock? Well, you need to know, you need to actually game plan. It's got to go into your book how you plan to hold that stock if you plan to hold that stock as earnings gets closer. For me personally, and the way that we do things in our community, we actually have it very, very cleanly mapped out that we need to have a certain percentage move in our favor or a certain percentage average true range in our favor from the entry point to justify holding that trade into the earnings announcement. Now, personally, if you don't have a trade heading into the earnings, we actually have a much simpler trade to make after the earnings comes out, where you're not playing all that game back and forth, guessing and worrying about the expectations, the guidance, what actually happened. You just let the market tip its hand, have that stock produce a gap up or a gap down, and then you just trade it afterwards. It probably over the next couple of weeks. And I actually have a good example for you on that. We actually had that trade play out in JP Morgan, which you could actually see here. This was the gap on JP Morgan. And then we actually have also ABT, very, very similar, which is now pausing right at this long-term breakout level. We're going to actually break that down in a second. Actually, you know what would be kind of fun? Obviously, if the week is just starting, post in the comments what you are trading this week, and maybe we'll take a quick look at that as well. I always love to have the back and forth. That's kind of cool. So let me know what stocks are on the top of your list this week as we kind of break it down. But I do want to make one announcement. We're actually super excited about this. We're having our first big live event in October. So I just wanted to give everybody a heads up on this. Maybe make some travel plans. We'd love to actually see you. So we're actually going to be in West Palm Beach, Florida on these dates right here. And what's kind of fun about this is not just going to be about trading. It's going to be about trading. It's going to be about entrepreneurship, building and growing a business, and also investing. We have a bunch of speakers that we plan on having. So look, it's so awesome that we can interact on social media like this, but there's nothing like, getting in person, having a hug, giving a high five, and actually getting to know each other a little better. So if you'd like to attend that with us, we'd really love to see you. We'll make an announcement about it as we get a little bit closer this week, actually, to give everybody a link. They could check it out, see all the speakers that we're having. It's the end of October this year, so I'd love to see you there. So let's get right into it. Let's get into today's newsletter. And the newsletter I'm about to show you, you can actually click the link below in the description and make a copy for yourself. So I'll actually show you how to do that right now as well. Let's actually dive a little bit into some of these ideas. Thank you so much for being here. Let's see. Oscar's looking at Chevron this week. All right. So Chevron, actually, for me personally, I really wouldn't be looking to do anything at Chevron until it actually kind of gets out of this box and could finally stay out of this box. We know we had this big gap up here on the OPEC announcement, but a lot of them have really not done that much at all. So again, Oscar, this is for me. Again, everything we're doing here is for educational purposes. This stock does have some room to go. And obviously up in this 188 area is probably the cleanest move you could see up here, which is, again, if we're stuck in here, for me personally, if I did anything inside of this box, and especially after this move, I would not have full initial position size. It would probably be, might call a feeler position, initial position, only because of the gap and the move prior to the gap. But I wouldn't do anything in size. Again, me personally, until we get out of here, and then I'd look for this move basically from 173 to, let's say, 187, somewhere in that area. The XLE has been really inconsistent. You can actually see that there as well. So thank you for that. Let's see. Yeah, Merck. I like Merck, actually. And first of all, let's actually tie Merck into what some of the other stocks in that sector are doing, which is this. XLV has been on fire. Look at this 5-week chart. 1, 2, 3, 4, 5. Last week paused a little bit. We're seeing a consolidation. But after all of this selling, it just came back like a house on fire. And Merck, which has actually been producing some pretty good energy candlesticks. Let's actually go out to the daily chart. And you can see boom, 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 right? Big push up and a pause, big push up and a pause. And now we're kind of resting at this level. 115 and change. Personally, again, I don't want to trade where the sellers keep shoving it down. I like it over 116. That's the area that I'd be looking at it. Let's see. KOLD. That's a new one for me. Let's take a look at that. Ultra short. Okay. I can understand that. I haven't personally traded this. We do trade some of the ultra shorts, but we mostly when a lot of the community doesn't like to short sell when things are going down. So we look to buy the inverse ETFs in the other direction. So we've been trading SQQ and SDS when the market comes down. Let me actually put that. Excuse me. There you go. SDS is the one that we're trading in the other direction. Yamit, we just talked about Amazon. I'm liking that one on that breakout. It's got a hold above that level. Google and Amazon were actually fighting. Both of them were fighting for 105. It looks like Amazon had a little bit of a better breakthrough. I want to make sure I say your name right. Hadali Salazar. Just make sure that you read some news on Google, because Google is having a lot of back and forth right now with Microsoft and Samsung, and whether or not they're going to be the search provider on their services. And actually, it looks like they might be actually charging a little bit more, which was actually the first big gap down over here. So obviously it has earnings coming out, but do a little bit more research on Google right now. Let's see. ALB is a buy after a 19% drop. Without even me looking at that chart, I'm going to say that's not how I typically trade. I don't trade that way. And I don't trade penny stocks. Oh, excuse me, ALB. I don't trade penny stocks either, but I want to just talk about this, okay? By the way, Osby, thank you for this. Let's actually pull this up on the screen and let's actually leave this on the screen for a second. Okay. There's a very famous quote in stocks. And actually, it's funny. I just actually read it about an hour ago from Gerald Loeb. If you've actually heard the quote, if you have actually read the book, The Battle for Investment Survival. And one of his quotes was the only time to buy a stock is when it's going up. Now, for me personally, and Osby, thank you so much for this. I don't generally buy stocks that are doing this. I don't want to buy a stock when it's going down. I want to buy a stock when there's some order flow, when somebody has institutional attention is starting to push that stock in a direction. And then I'm just looking to piggyback on top of that. You could maybe you have fundamental reasons for buying this, but I think it's trading classic cliche, for lack of a better word, if you want to call it wisdom, that buying a falling knife is just not a high probability trade. So maybe you're looking at it after this and a 19% drop to the downside. Look, it dropped 19% for a reason. I'm not looking to step in front of it. And quite honestly, I don't think that you really need to go that far to find some stocks that did the same thing to say that, oh, it dropped 20%, it dropped 30%, it dropped 40%, it dropped, and it just keeps collapsing. You don't want to put yourself in, again, this is educational. I'm just telling you what I do and I do in our community. I don't generally buy stocks that are collapsing. I want stocks that are already showing institutional buying attention. And then I'm looking for entries to find a way to hop into there. So Osby, it's a very, very tough thing to say just because the stock fell 19%, it's a buy. That's not how I trade. And I just want to be super clear about that because it would be disingenuous of me to say good idea if that's not actually what I do. Obviously we talked about the tech stocks, right? But let's actually start getting a little bit more into the research and how things are unfolding today. So let's actually hop on over here. And I want to specifically talk about this and the last 4 weeks of trading. This is actually how we unfolded last week. So you can actually see a lot of neutral type price action in there. So I want to hop on that for a second. I think it's very important as well. We had this conversation again on Saturday, which we're going to break that down in a second. Everybody had, like, you're on the call right now. It's early in the morning. Maybe you're watching the video later. Or maybe you're listening to the podcast. We're all ambitious, right? The whole reason we're in the market is we believe that we have more inside of ourselves. We believe that we could take charge and see that unlimited upside, right? But we have to judge our outcomes based on what's available. And you can actually see here, let's actually bring this up and make it a little bit bigger. You can see here that the week of April 17th, the market was kind of neutral. We kind of hit that resistance level. I think the S&P 500 now is right around that 418 to 420 level that a lot of people are talking about. I kind of like this level here, the 416 level. You can see we're actually off of that a little bit. We kind of hit that wall and we're looking for a new catalyst. Maybe large cap tech stocks will give it that this week. But the point that I want to make is when you're judging your results of how you traded last week, it's very important to discuss two things. Number one is, did I trade well? That's the first thing. And trading well has to do with, did I follow my strategy and did I game plan for every stock that met my strategy? If the answer is yes, then you traded well. The second part of that is being nice to yourself about whether or not you achieved the bigger results that you would have liked to have achieved last week in the context of what the market made available. So basically what I mean by that is this is what was available last week, Monday through Friday, compared to what we saw over here the week of March 27th. So when you're judging your results, it always has to be two things. Did I follow my strategy and did I game plan for my strategy? And the second one is, did I make what was available? So on a tighter week that we had last week, it was very stock specific, very industry group specific. And we're going to run through that list in just a second. And then you have to say, okay, there was kind of some opportunity. I managed my downside. I took advantage of some opportunities that were there, but maybe it was a week where we didn't have to push it or shouldn't push it because the market kind of traded sideways, if not pulled back a little bit. And a lot of people call that profit taking. So you have to be nice to yourself. I know, again, we want to push ourselves and we want to be, the person that has those big numbers, but you got to put that in context of what happened. Now, that's kind of tying us into the question that Cynthia asked on our weekly call. And let me actually zoom this in a little bigger. And again, you can download a copy of this in the description, right? So we start out with a quote by Jesse Livermore, but this is really what I want to talk about here. This quote from Cynthia. Let's actually bring that into focus here. How do I manage trades that move from positive back to my entry price? So again, there was a lot of that kind of back and forth last week based on how the market was kind of choppy. All right. So when I owned my trading firm in New York City, we called this the phantom zone. Not quite profitable and not quite moving against you. This is really big picture thinking here. This is something you really want to write down. Okay. After a round of back and forth with the community, we discussed goals. In other words, why are you trading? Why did you open a trading account in the first place? And more specifically, growing your account over the long term. And the number one priority for us as traders is capital preservation. Now, before we even get into the rest of this conversation, I just want to ask you, why did you open a trading account? Okay. We opened that trading account so that we could maybe quit our job and maybe replace our job, maybe just make a few extra $1,000 per month. We all maybe pay your mortgage, whatever it is, right? But we have to think long term. Sometimes we get too frustrated with the trade by trade results and start to doubt whether we have a good strategy, start to doubt is trading viable, start to doubt whether we can do it or not. You have to pull yourself back and look big picture. And remember, you opened a trading account for the long run, not for the hour. You're not getting paid by the hour. So I want to keep breaking this down. It's very important to understand this. Okay. So the number one goal, the number one priority for us is capital preservation. Something rarely taught is that you need experience, real world decisions to help you make better decisions. So in other words, the only way to gain trading experience is by getting in your reps. You need to trade to learn how to trade. Now, I know that sounds overly simplified, but bear with me here for a second. Then we brought the discussion back to long-term goals, long-term account growth, and how one trade not performing should not create stress. Think about this. I almost guarantee you that people on the call right now, they're like, oh my God, every uptick and downtick, your heart's pounding out of your chest. Dial that back. Don't let that bother you. You bought stocks, buyers pushed it up, sellers dropped it back down. Buyers didn't have the demand to hold prices higher. That's a fact. Eliminate all the stress of wondering why. Buyers tested the market and failed. Simple as that. You made an educated guess. The stock failed to hold the bid. Now your job, your top priority is to preserve capital. Holding a trade, giving you negative feedback is contrary to your long-term goals. So that kind of actually gets back to what we're talking about here, this trade by Alba, right? There's abundant opportunity. Quite frankly, there's endless opportunity. There's more opportunity than you or I will ever have enough capital for. And this is a great thing. But and here's the big thing. We get this question all the time. But Pete, what if I exit and then the stock goes higher? It does exactly what I thought. Who cares? Let go of your ex. You broke up with your ex. Let them go have their life. And now it's time for you to start to look for some new opportunities. Move to the next trade. Livermore's famous quote relates to being patient for new trades and being patient while you're in a winner. It's the first part of that you need to follow to gain experience. Stop obsessing over the result of each trade. Think long-term. Have the patience to learn, the patience to improve, and the patience to gain valuable insights from each outcome. If a trade isn't working, kick it out and go look for the next wonderful opportunity. So I basically want to talk to everybody who maybe is even holding losing trades from that 2021 bull market and 2022 and all the way down. 2023 is kind of sideways and you're sitting on some big losing positions. Think some time into the future, into your next idea, and the fact that there is abundant opportunity in the markets, more opportunity than we could ever have enough capital to take advantage of. And that's just a fact. That's just a fact. So when you think about holding a position that's not doing what you want it to do and thinking about the abundant opportunity where the next big winner could be like right around the corner, there makes no sense to hold on to trades that aren't doing what you want when you have the next great idea lining up, which now we're going to kind of work our way into the ideas that I'm personally looking at this week. And maybe you could take advantage of some of these as well. Okay. So we're going to kind of scroll down. If you actually happen to be trading options, John Napolitano has a really good segment to today's newsletter where he breaks down the VIX and how the VIX playing into the market should be something to keep an eye on right now. There's a lot of talk right now about zero-day expiration messing up the VIX right now and a whole bunch of other conversations around that. You want to take a look at John's commentary here, but as promised, I want to break down the entire market and the ideas that I'm looking at for this week. So when you download this, make sure you have this outline open so you can just click right into the section that you want to watch. So again, we talked about Amazon, but the sector that we're looking at right now are consumer cyclical stocks. So if we kind of break down the S&P 500 and pull this map in and go over the last week, you can actually see that consumer cyclical over here has a very large number of stocks that are green compared to the rest of the market. And that's where the money's hiding. Again, the real order flow is hiding in plain sight. You just have to stop predicting. One of the biggest things that we have in our community is stop worrying about where it's going to be a month from now. Focus on the information in front of you right now and what is it doing right now, and what is the likelihood, better said, what is the probability of that continuing? And that's really how you develop a trading edge. That's where strategy comes from. I know there's a couple of very popular people on Twitter right now. One of them's name is Lance Brightstein. He's fantastic. If you haven't seen his stuff on Twitter, he has something that he calls EV, right? Expected value of that trade. So we have to calculate, we have to look at the market and say, what is the expected value of that thing following through? That's the whole reason we take risk in the first place, right? I think it's a fascinating concept because he brings it all the way back to risk is not volatility. Risk is whether or not the odds of you hitting your target, your profit moving in your favor versus that stock moving against you. And actually, Lance breaks it down where he talks about the regional banks and the fact that he believes those stocks were a great opportunity based on expected value, not based on the volatility. So we kind of bring that in and we take a look right now at consumer cyclical stocks. It's the largest part of the map that has the most positive feedback last week. And look at that big red mark in Tesla there, right? So let's continue to break this down. Let's continue to go through. So Amazon, obviously on the breakout, which again has earnings this week. You got to be aware of that. But residential construction broke out this week. KBH, DHI had a monster move last week if you didn't happen to see that one. So again, regardless of what you think about the real estate market, these guys just continue to churn higher, hold the 50-period moving average, big bullish gap. So we got DHI, we have Toll Brothers, we have Lennar, a little bit of a pullback, profit taking on Thursday and Friday, looking for those to continue to push higher. LVS broke a string of lower highs dating back to 2018. Let's take a look at the longer-term LVS chart. This is really where we're talking about stacking the order flow over time. And I want to pull out the monthly chart. This is kind of cool. Look how we finally broke going all the way back to May of 2018. So 5 years of lower highs was now broken last week in LVS. That's really important. And not only did we break out of the area where sellers kept pushing it down, we actually did so on earnings, got through this recent price action and stayed above that level on some good volume. And we closed on the highs on Friday, showing good relative strength. So again, starting to build the argument. So LVS is the one that broke through. So you obviously want to keep an eye on WIN, again, focusing on sectors and industry groups. And this one's kind of resting right at a breakout level as well. All right. Going to keep working our way through this list now. All right. So there's the long-term move in LVS that we just talked about. After 8 weeks of bearish price action and order flow in the healthcare sector, they obviously have now put in a giant V bottom. And V bottoms, a lot of people call them short covering. If we kind of look at this over on the weekly chart, you can see it a little bit more dramatically. Let's take a look at some of the ideas in this group that are on my watch list heading into this week. Okay. Stocks for the watch list include VKTX, ABT, DXCM. You see there's a big list here. I want to focus on two that are at all-time highs, Lilly and HCA. Lilly and HCA. And by the way, let's actually stick with Lilly here for a second, right? For those of you that are thinking now there hasn't been that much opportunity because you're too obsessed with watching this thing go sideways, you just need to build a little bit of a better strategy for understanding how to follow the flow of money in and out of sectors, because this is really where you can constantly be in position to be looking for stocks to buy that have profit potential simply by doing your numbers every day. And if we kind of break that down even a little bit deeper, I just want to show you some of the metrics that we put out for the community every day and how they kind of affect our trading decisions. And you can actually see here 4 out of 5 days in the market, the advanced decline line traded below zero. So Monday was pretty good. The last 4 days we were negative. The high-low difference continues to push lower. And on the other side, we still have some breakouts. So the breakouts actually are outpacing what's going on in the rest of the market, but that number is coming down dramatically as well. So this was kind of holding up the market. And we saw that where we had that nice 2 or 3 week move in the market. But now the loan metric that the market was leaning on is pulling back as well. So now we got to kind of start to reassess what we're looking at. So if we kind of break that down in the bigger picture, for me personally, I'm not looking to trade or to feel like I have the bigger picture of the market behind me until the S&P 500, the SPY specifically, has a pause like this up here, which means that it pushed through this level and then finally stayed above that level. So again, mapping out going forward what I'm looking for in the market. Okay. So bringing this back to some of these ideas, obviously we just talked about Lilly and HCA making new all-time highs. If you're looking for something that's a little bit less expensive, VKTX is a lower price stock that if you want to take a look at something in that price range around 20, 21, you can see the kind of price action it's had recently as well. I want to make sure I touch on Bitcoin. Again, we got a bunch of questions about Bitcoin. It's pulled back pretty hard, but this is the kind of level where if it's going to hold, this is the level for it to hold. So for me, again, for me personally, I haven't traded one dime of cryptocurrencies, but I do trade crypto stocks. So Mara's been a big one that have been watching in the community. Coin, a lot of news on Coin, which is also broken down now with an SQ block also showing some relative weakness. So for those of you that sent a message to us, I'm not looking to buy any of these stocks right now. I need to see them catch a bid more than just a couple of days. So I'm not looking to do anything in here for those of you that reached out to us. Okay. Just wanted to make sure I touched on crypto a little bit. All right. So now obviously getting back to Goldman Sachs and the whole financial sector. Financial sector did the opposite of what many fear-mongering headlines predicted for clickbait. Going down, Armageddon, all that kind of stuff. Financials reported solid numbers and have traded into a bullish tone. So the headline today, obviously, we're looking at Morgan Stanley and Goldman Sachs. But look at these numbers here. Morgan Stanley has now produced 9 out of 10 green daily candles, which means it closed above the open compared to, closed above the open and in most cases near the daily high. So buyers came in after the open and held it there. But Goldman Sachs has 12 out of the last 13 green daily candlesticks. Also, look at this push and a pause, a push and a pause, a push. And now we're right at, this was a big resistance level. Now we're back above the 50-period moving average and looking for that to push higher as well. Okay. All right. So moving on, JP Morgan traded into a bull flag, but this is important here, has resistance. So let's take a look at JP Morgan right now and where we're sitting. So this is the earnings gap in JP Morgan, pushed and paused. We have this resistance here, and the next significant levels up around 155 and change. So again, I want to walk you through what my thought process is on a stock that's clearly bullish, clearly looks like it's ready to go higher, but also clearly has resistance close and doesn't have profit potential until it clears that resistance. So in that situation, again, let me pull that up on the screen for you, which is Morgan Stanley. In this situation, you can see that line there, but the price is just below. So we have the first line here, which is the most recent resistance, and then the next level, right? And you can even say that's kind of minor resistance. The real level's up towards that 160 level. For me, if you're in my community, you'll hear me talking about a two-step trade. A two-step trade generally means I really like the idea. It's giving me an entry setup that I really like, but there's resistance not too far away, but through that resistance has more room to go or profit potential. So it has some work to do to get through that level. So in this case, for me, I would be putting on my first piece, looking for it to get through that level. If it gets through that level, great. I'll put on the second piece looking for that bigger move, but I will not allocate more money to that because of that level where sellers are apparently coming in the last couple of times. Now, maybe earnings is going to change that. Maybe the earnings catalyst is going to push it through that level. So again, we have JP Morgan, Goldman Sachs, Morgan Stanley at the top of the list in the financials that I'm looking at this particular moment. Okay. And we're going to touch on this in a second. Hey, John, how's it going? Let's see. When I check sector rotation, I get confused because some consumer discretionary, which ones to go with in the indices. Well, that's a part of actually having your software set up properly. I can't express this enough. In order to be able to track every single day and produce these kinds of reports, you need to be doing it on a daily basis and you need to be doing it over time. So the way that we do it is it's very important. And this is actually the very first thing that I teach everybody who comes into our community. The very first moment that you're in our community, we actually hold a live chart session to make sure that your charts are set up properly and to make sure that your watch list and your market internals are set up properly, because there's two phases. There's first learning what to look at, and then the second part is making sure your software is set up to tell you, here it is. So, John, that's probably something you just need to work on in setting up your stuff, is to make sure that your charts across multiple time frames and making sure that your watch list has the right stocks in it over time. So are you watching it by the hour, by the day, by the week, or by the month? That will tell you how fast rotation is happening in the sectors in the time frame that you plan to trade. So for example, day traders might be looking hour by hour or day by day. Somebody swing trading or holding a little bit longer might be looking weekly and monthly. So you need to match up the sector rotation that you're tracking with your trade objective. So how long do you plan to hold the trade will dictate which order flow you're watching, and then that'll dictate how you set up your charts for what we call stacking the order flow and reading the tape. So that's actually a good question, a really, really good question. Okay, so let's actually continue with the breakdown here. So again, there's the two-step trade that I'm watching for in JP Morgan today. Meanwhile, MasterCard, Visa, and Discover Card. If you haven't been watching MasterCard and Visa, they've actually had some pretty nice moves lately. And look at this, really clean moves, maybe a little bit of resistance up here, but definitely worth watching. Looks like Visa's got a little bit more room to go. So again, look at that. Sellers continue to hammer this thing down, having a hard time getting through 235. If it can get through 235, looks like there's roughly $30 to the next level. So again, this is another example of how you would build your position. Sellers just keep coming in and hammering this thing right now. So there's no way in the world I'd have a big initial position despite all of this profit potential, but it could be worth having a small position just to be aware that it finally broke out. Now, the conservative way of doing it would be setting an alert as opposed to putting on a position. So let's just say, for argument's sake, the level's 235. You go into your software and you're going to actually add an alert. So what I'd be actually doing here is I would have an alert at 236, and I'd want to say crossing up. So I wouldn't get involved in all this selling over here. And I'd be like, okay, wake me up when it gets through that level, send me that alert, and then I'll start to look at it instead of actually buying it until then. So you kind of allocate your capital into a different position. All right, so let's continue to break down. So those are the financials. Now we want to kind of break down a little bit deeper into industry groups. So again, if you're not familiar with the power pyramid, that is a big part of what we do. What we basically just did is we worked our way up the list. We started out with the market, went to sectors. Now we're going into industry groups to find some ideas that would be stock specific. Medical devices. You can see Abbott here with a really big breakout. You can also see DXCM with a really big move and hovering right at a breakout level. And this is a really nice clean move. Now, a couple of days above this level, and we're getting a little bit of follow through here this morning as well. Household, Procter & Gamble actually had great news last week. If you didn't happen to catch that, they had the opposite news of Tesla. Procter & Gamble actually raised their prices, which raised their margins, which turned into good earnings. Tesla did the opposite. Tesla was lowering its prices, lowered their margins, and Tesla's going in the other direction. So these are kind of boring, slow stocks, but you know what? A slow dollar is still a dollar. So take a look at this list here. Restaurant stocks, we've been talking about these guys for a while: Starbucks, McDonald's, and Yum. Keep an eye on McDonald's because McDonald's has been a ball of fire recently, but earnings are coming out. So you got to be really aware that this move, this percentage move especially, again, for those of you that say you can't find stuff, and getting back to John's question before about rotation, 12%, barely a pullback. That's about as good of an example of a stock holding the bid. But now we have earnings coming out tomorrow, so you might be a little bit late to put on a new trade there heading into earnings. But really clean breakout and a really nice move through that level. But I want to kind of work our way down. Solar stocks obviously caught a bid last week, one of the bigger ones. Two of the bigger ones that we're watching, FSLR, and on the opposite side of the market, ENPH, hit a resistance level and now is pausing in front of that resistance. So again, very similar to what we just talked about. I'd have an alert set here for 230 and not do anything until it actually gets back above 230. It's pretty interesting. You got a big double bottom here. You got a push, a pause, hit this wall of sellers, but now it's down at 221. So I'd have an alert set for 230 and I wouldn't even do anything until then. The other side of the market, just talked about looking to short any ideas. So if you work your way all the way down the list here, we actually do have some potential stocks, and specifically in healthcare plans. If you take a look at these stocks right here, they're all showing relative weakness to the market. And you can actually see CVS has plenty of room to the downside. Cigna, probably a two-step trade over here. So, boy, there's a lot to cover today. And don't forget to hop in here and read the options breakdown that John gives. He actually goes bar by bar and how this orderly pullback is translating into some ideas on the equity side of things. So options and stocks, they're kind of like peanut butter and jelly. Make sure you read that as well. So this is a big week of tech earnings this week. Has the financial sector, and specifically the large cap in that group, in that sector, carried the market now? And is it going to hold that bid, or will tech kind of drag it down? If you haven't noticed, semiconductor stocks, which were absolutely on fire, are kind of now going sideways. Let's actually just take a look at that one stock that is probably the biggest talked about one in that group, and you can actually get a feeling for this. You can see here NVIDIA, which pretty much carried the market. I believe this was like a 90% move or some crazy number like that. 94% move from January up until April beginning, and now the stock is kind of going sideways for 4 weeks. And that's kind of why tech itself has cooled off a little bit. This one group kind of carried it. Now what we're looking for, will the large cap tech stocks that everybody knows, all those household names, be the next catalyst, or will the fact that credit's tightening a little bit affect their guidance? They might report good numbers, but the guidance is what we need to pay attention to, which is going forward and whether or not they're starting to feel that credit crunch. That's going to be really interesting. So, boy, there's so much opportunity this week, both on the long side and the short side, as well as earnings catalysts. So there's a lot to cover. Look, if we did a good job today, if you could please do me a favor, subscribe to the channel. And if you found this valuable, make sure you hit that thumbs up button so it lets me know that this is the kind of stuff that you like. Make sure that you go into the description and download this copy of the daily ticker for this week so you can make a copy for yourself. You can actually go to File, Download, and hit PDF so you can make yourself a copy as well. If you have any follow-up questions, make sure you leave those comments below the video, and let's make it an awesome week. I can't wait to speak to everybody soon. Let me know how you did this week. Okay? Take care now, everybody. Thank you.